Hi everyone, I'm Ross MacRae, Group HR Director and Deputy MD at the Orion Group. Welcome to our presentation series on off-payroll working. Off-payroll working refers to the impending revision of IR35 legislation, and in this series of 7 presentations we address a range of matters that affect both subcontractors and the end users of their services. This is number 1 in the series, and in this presentation we'll cover the basics regarding what is IR35. Before I start, I should qualify my personal IR35 experience. I've been heavily engaged with IR35 since the first government white paper came out back in 1999, and since then I've been involved with hundreds of IR35 assessments, spent a lot of time with senior HMRC staff, I've worked with various representative bodies, and I've tracked the case law that's informed how we interpret the original legislation. Now you should note that the following information is for general guidance only, and whilst accurate and based on known fact, the presentation is not a substitute for legal advice. So there's been a lot of media attention on the contracting community since now former Chancellor Philip Hammond confirmed in the autumn budget in October 2018 that IR35 reform applied to the public sector in April 2017 would be introduced into the private sector in April 2020. But IR35 is not new. We've been aware of it now for 20 years, as it was initially announced in a budget press release in March 1999, with the legislation taking effect in April 2000. The Finance Act 2000 and Social Security's Contributions Intermediaries Regulations 2000 is IR35's Sunday title, but it's known simply as IR35 because of the reference number that the revenue gave to it. IR35 was originally introduced as the government believed that various intermediary schemes, primarily limited companies, were being used to avoid national insurance and tax contributions. The government believed that in certain sectors, people were transferring from staff jobs to contractor status and continuing to do the same job with the same company, but dramatically reducing their contributions to the revenue and benefiting from increased personal income. Substantial increases in self-employed numbers, particularly across sectors that were typically staff historically, also reinforced the tax authorities' desire to act. So to understand how the proposed changes this April impact the contracting landscape, we need to fully understand how IR35 works just now. So, who does IR35 affect? Well, IR35 essentially affects all contractors who do not meet the revenue's definition of self-employment. And what is the effect of IR35? If a contract assignment falls under IR35 rules, the revenue will treat company income as salary and calculate a tax bill for tax and national insurance contribution on that deemed income. So with regards to what you should do, or indeed have been doing since 2000, well, you need to establish whether you are self-employed or not. This is not easy, as employment status guidelines from the revenue do not provide user-friendly assessment criteria. The revenue also look at the complete relationship between the contractor and the company that they provide services to, rather than just the contract under which the services are provided. As is the case, contracts must reflect actual working practices and not just read as a checklist to circumvent IR35. There's a number of tests that they use to establish whether a client-contractor relationship could be classed as one of employment for the purposes of IR35. There are many criteria that the revenue assess, but there are a number that are central to the review, and this has been backed up by case law. We'll cover these in the second and third presentations in our IR35 series. Thank you.